Connor Theofold. He's a certified financial planning professional and wealth advisor at LGH Wealth, co-host of the Brick by Brick podcast, and we've got him on the program. Connor, how are you doing?
Al, I'm doing pretty well. Thanks for having me back.
Love that we're doing this program. I love we have somebody coming on that understands finances and will explain it because we talked about it last week. I think it's one of those things, for whatever reason, we just don't try to teach people at a young age, right? You'll teach them math and that sort of thing, but not what to do with your money. And I don't like that at all. I'm glad you're here to help answer some questions. Brick by Brick, I love the idea of this. We talked again about it last week. I'm now stalking you on, I don't know what it was. Must have been LinkedIn, might have been Facebook, somewhere. And you made an analogy that just hit me. You made the analogy of wealth planning or what you do with your money to curling.
Yeah.
Can you describe that? Why is my wealth and my money and how I retire like curling?
Yeah, so I play, or you don't really play curling. I curl occasionally up here in the Twin Cities, and the game is interesting. It's, you probably have seen it maybe on the Olympics or something. It's the game with the stones and they push it on the ice and they sweep and you don't really know what's going on. Well, I didn't know what was going on until I started playing it more consistently. And interestingly, it really is kind of like a big game of 125 foot on ice bocce ball. And you're often trying to score points, or maybe you're trying to defend. Maybe there's a situation where you can't get the shot that you want. So you're trying to figure out what's the next best option. And also, how do we prepare for if this doesn't go the way we're hoping, if the other team makes a shot or something like that. So it was analogous when I went up to the St. Paul Curling Club, which is fantastic, a couple of weeks ago, because I thought about that. And a lot of times financial planning or wealth planning is the optimal path. What are your goals? What do you want to happen in life? Okay, how do we get there? Starting on that path in an actual intentful way. But then realizing life doesn't go in a straight line. Life isn't a series of a spreadsheet or a series of here's what's exactly going to happen. That's not the way things work. There's always potholes, some of them good. There's sometimes misdirections, and again, some of those are good, some of those are really bad, but you have to be prepared to deal with all of them.
Well, see, and what I got out of it, again, like curling, every 4 years, I become an expert at curling. I start watching it on the Olympics, and you watch as the Americans are climbing the board, and then you hear all the strategy from the people who actually played it. And by the time we get to the championship round, I'm yelling at the guy what he should be shooting, right? I understand I become an expert in 4 years, and then 4 years later, I've got to learn it all again because I don't curl. You might want to work on this about golf, something people play. But let's go on. You must have to deal with that sort of mentality, my curling mentality, every day. I look at it about every 4 years, right? Look at it and say, oh, what's going on? Oh, I saw the commercial, gold is good, or I saw silver because, they got to make more watches. And you see that, and all of a sudden, I'm coming to kind of saying, hey, I know what I got to do because I've been studying it for all of a week and a half now. And you must have to Dr. Phil that with people all the time, right?
Yeah, it's
okay,
funny.
Al, go ahead.
Speaking of the LinkedIn thing, I'm actually doing a financial fallacy February is what I'm calling it, which is really kind of a mouthful. But that's lots of F's. And was that alliteration? I don't know. I'm a numbers guy, not an English guy. But I am going to be breaking down every week financial pitfalls that we find in our mind. So you just mentioned a couple, one of them being kind of herd mentality, which is I saw it online. I saw people, my friends are talking about gold. So I got to go out and get gold. Obviously, it's it's chasing the crowd, or there's safety in numbers. If everybody's wrong and this isn't a good decision, at least it's not just me. And then recency bias, which is another one, which is we put more value on things that just happened versus the things that have happened, say, longer ago over the long term. Yeah. So if the market, for example, is up for some investment, like you mentioned gold, which is a big one recently, or silver is up, we figure, well, that's what's got to keep happening. Look at what it's doing. Not, hey, what's happened over the long term, and bringing in more data to help us. But we just naturally do that as humans. So you ask about Dr. Phil. That's all something, kind of a discipline called behavioral finance. The psychology of money is, or how people interact with money, is 90% of a financial planner's job.
Well, I would think, I don't know how many psychiatry classes they give you when you go to get all the letters behind your name like you've got, But I would be like, I'd come to you, and this is just me, and I know I'm wrong, but I'm probably right because sometimes I am. I would come to you and I say, Connor, I remember when the market was not going to get past 10,000. Oh, it's at 40,000. No way this can keep going. This has to end. This has been too big a run. I know for a fact I would think, because of my negativity, and it's got to turn. Well, you deal with that on a daily basis. You must look at it up, down, up, down. How do you go and Dr. Phil, a guy like me that says, because maybe it is going to go down. I mean, at some point it will, I presume. But how do you do stuff like that where a guy like me runs in and says, I know for a fact it can't keep going up? Well,
yeah,
maybe, but how do you deal with guys like me?
So you're hitting right on the head. You mentioned our podcast, which we're launching next week. We're working on what's going to be third episode, and it's all going to be released, in succession and sequence. But our third episode is about the behavior of investors and dealing with that. And how do you decide whether or not you're acting or you're wanting to make a change, for example, emotionally or kind of off the cuff or, based off of these financial kind of fallacies that we have? And how do you decide if you're just being prudent or proactive? Yeah. And what we came to is the decision you're making, the change you're making, part of your long-term plan? Are you looking myopically at right now, the thing I saw on TV yesterday, the thing that's been going on the last couple of weeks my friends have been talking about? Or are you making a change or suggesting a change that actually relates to the plan that we've planned for the next 30 years or 10 years or 3 or 4 years? Are you just stuck in this moment right now? Is this a decision that's based on the immediate, or is this a decision that's based on your long-term plan? Which again is, hey, if you're throwing the stone in curling over here, are you doing that because of you just want this shot to be what you want it to be, or is it about the third shot from now and what the other team might do? See, but that, to me, and again, you tell me if I'm wrong here, to me, that's why you almost have to have a guy like you, right? LGH Wealth Management. Because guys like me hear the news, see the news, run scared of the news, and if I had a plan, right? You set me up, I'm 30 years old, and you say, Al, if our plan, everything goes normal, you're going to get to here, and I'm excited about that. I then don't have to look at these microscopic things on a daily and say, and are we getting there? Connor, he's like, I call you up and said, yeah, part of the plan, Al, it's going to go up and down. You know what I'm saying? Almost to take that fear, if that's the word, away from a regular guy, is to have a plan. I think the plan's got to help. There was a huge study that came out, which again is going to be part of what we talk about a little bit in our third episode. Basically the episode is called "The Hidden Risk to Investor Financial Lives: Their Behavior." But there was a study that came out by Vanguard, which is a massive investment firm, kind of the father of the index fund, meaning investing in just quote the market. Set it, forget it, don't touch it, you don't need advisors, that kind of thing. And what they found was, and it's a little bit different and there's a wide range here, but the average investor would be about 3% a year better if they worked with a advisor. And a huge portion of that, almost half of that 3% a year over the course of their investing lifetime, is the behavior. It's the don't react and chase returns and buy something at the high. It's the don't freak out and sell and get out and sell something after it sold off a lot, but then miss a recovery. It's the focus on, look, just like we said, how is this lined up with the plan we made a year ago when this emotional thing wasn't happening? And if it doesn't line up with it, that's when you take the cue of, okay, I need to take a step back, take a breath. We have a long-term plan here, which I think is one of the biggest values to financial planning as it relates to investments. It helps people stay engaged when they probably should. All right. So and I don't know if you'd have an actual number for this, but when you get someone in and you get a plan and you've got it set, not necessarily in stone, because I'm sure you can bob and weave, but how much is your then life when these people call and say, hey, what about Connor and the thing? And you just say, hey, hold on, we got a plan for that. Do you limit a lot of that because I don't have to worry anymore? Connor got us there. We're getting a plan. It's good days, bad days. Yeah. Does it limit the number of those? I call them crazy calls because it'd be a crazy call from Al. We're fully accessible to our clients, but I will tell you that after probably a couple of months, if not a year of working with us, clients don't make those calls hardly anymore. It's our job when things happen. You get your tariff sell-offs, you get your COVIDs. It's our job to call proactively and say, hey, just so you know, here's what's going on. But we're almost always met with, hey, I knew you were on it, not even worried about it. But that's the point. When it's not, when you're allowing the responsibility to go on someone else, and hopefully someone you trust and someone who knows what they're doing, there's less reason to be concerned than, hey, on top of my life and my family and the life that I'm living, I got to figure out how to take care of our financial future on the side.
Yeah. Boy, that alone, I think, would be worth the cost of admission, if you'll pardon the ride expression. But to know that someone who does this for a living is taking that off my plate, as far as worry, now I suppose you're always going to be a little worried, but as far as that day-to-day management, I love that. We got to go to break. We'll be back with more. I've got him, Connor, with Brick by Brick.
At LGH Wealth Management, our mission is to create financial empowerment through independent, personalized, and authentic financial planning. That means meeting you where you are and helping you get where you want to go. Whether you're a business owner planning for growth, succession, or a future sale, or a hardworking individual looking to get ahead, reduce stress, and tackle life's financial challenges, we're here to help. From retirement planning and investment management to tax-efficient strategies, estate planning, and risk management, LGH Wealth delivers comprehensive guidance you can trust. Call LGH Wealth Management today at 507-525-7324. That's 507-525-7324. Securities offered through J.W. Cole Financial Incorporated, JWC, member FINRA SIPC. Advisory services offered through J.W. Cole Advisors Incorporated, JWCA. Lubeck Geisler Ham Wealth Management Incorporated and JWC JWCA are unaffiliated entities.
Don't need to ask him his opinion more than once. Al Travis on the Al Travis Show.
And we've got him, Connor Theofold, certified financial planning professional, wealth advisor at LGH Wealth, co-host of Brick by Brick, the podcast, also the Brick by Brick radio show on the Al Travis Show. Connor, I should not ask a question I don't know the answer to on a radio show, but I'm going to. Since you started doing the show, I got and started getting this, I want to say it was a weekly, maybe it's a monthly newsletter from you or email with the things going on in the world. Is that for anybody, or do you got to be like with LGH to get a hold of that?
Well, if you're looking for information, certainly reach out and we'd be happy to share some. We like to try and stay in front of folks and get them information, get them updates, get them something that's digestible. There's so much news and information on your news, your TV, your Twitter, your whatever. It's nice to get something in one spot, and hopefully, once a month is digestible.
Well, yeah, it doesn't seem too much, but it does. It answers a lot of questions because you get a feeling the market is down or the market's up. You get a feeling, but then you got the numbers and it says, here's where we're at in the last month. And that helps a little bit. But let me ask you this on just a very broad statement. Of course, back in the day, tariffs was going to ruin everything. Stock market is up. Trump is now out saying this is the greatest market. You wait till the 2026 tax cuts come in. This is going to be the greatest year of ever, which he's apt to say. How much of that do you and the folks at LGH bust down that kind of talk and say, okay, we kind of managed the tariffs from last time? How much do you guys break that stuff down? Because if you listen to the president, I should mortgage the house, put it in the market. This is going to be we've never seen anything. And it's him. I get it. I don't want you to pop political with me. But do you guys bust that down and say, well, if the Fed does lower, you know what I'm saying? You break it down for me?
Sort of, but again, this goes back to the long-term plan. So from an individual investing standpoint, we're not necessarily day-to-day worried about who's in the White House for the next 4 years, because again, a lot of our clients are working on their next 10 and 20 and 30-year plans.
Sure.
Our portfolios, we meet every Monday. The investment board at the team meets every Monday, and we talk through what's going on, from earnings in different stocks to things that have happened in different sectors, to the Fed is potentially going to hold rates this week. We definitely look into what might happen over the next 6 to 12 months. And depending on different portfolios, we may make a change depending on kind of macro changes and things. But we're not going, oh my gosh, he tweeted something on Truth Social, we're going to sell it all, or we're going to buy it all. Last spring when we had Liberation Day and markets sold off really bad, it felt pretty obvious. I mean, especially in hindsight, that this was going to be a tweet away from recovering, and it did. A couple little, what would have been last week or the week before, he tweeted about tariffs to try and take over Denmark. There was a pretty big sell-off in one day. You hold your breath for a minute, and what do you know? It's even a bigger up day the next day. We're not reacting to the headlines. And when clients call concerned, which is fair, we're talking them through that and generally getting some calm.
You bring this up, and then we're going to have to go. But so if I have my account with LGH, you guys, how many people were there? You guys are getting together saying, Al's a part of the aggressive fund, and what are we doing with you guys? Have a group of folks coming up with this stuff? I mean, that's kind of cool.
We've got 8 planners or advisors on the team total, all our own independent businesses, and we partner together. Every Monday, there's 5 of us that are on the investment board that are deciding, okay, what do you see out there? What are opportunities? Do we want to sell this? Maybe we've made enough money that it's time to take earnings. Maybe we didn't win on one and it's time to reconsider, or maybe we're going to rotate to something that's similar but it's different for some reason. And then it's different portfolios that different people are in, and it's talking about, do we want to up the octane? Do we want to turn it down? Do we want to lean towards tech? Do we want to lean towards financials? It just depends on what's going on. But yes, every week we have a team of people that are talking through those things.
I love that idea. Just that the more minds the merrier, and you guys study this stuff. I don't have to. If I wanted to join LGH, or at least I wanted to talk to somebody about it and see if, I think you called it a date one time. Yeah, we're going to have that first date. How does somebody go about doing that?
Yeah, I mean, you can tackle it from a couple different ways. You could go on lghwealth.com, our website. You can shoot me an email, connor@lghwealth.com, or you can give us a call, 507-525-7324, 507-525-7324.
Connor, I appreciate this a ton. I appreciate you being on the program and answering these questions. Let's do some more next week.
Yeah, we'll see you next week, Al.
All right, it's Connor Theophil, LGH Wealth Management and Brick by Brick.
You've been listening to Brick by Brick, a work boots approach to your wealth, creating financial empowerment through independent, personalized, and authentic financial planning. The preceding program is sponsored by LGH Wealth Management, which is solely responsible for its content. Securities offered through JW Cole Financial, member FINRA SIPC. Investment advice offered through JW Cole Advisors. LGH Wealth Management, JW Cole Financial, and JW Cole Advisors are unaffiliated entities. The opinions expressed by the advisors at LGH Wealth Management should not be construed as specific investment, legal, or tax advice. Annuity guarantees are based on the claims-paying ability of the issuing insurance company and state agency limits. All economic and performance information is historical and not indicative of future results. Investing may involve the risk of loss of principal. Any tax advice on this show is not intended to be used by any person for the purpose of avoiding U.S. federal or state tax penalties that may be imposed on such person. Each listener should seek advice from their tax advisor or legal counsel on topics that arise from the show. The financial professionals at LGH Wealth Management are not providing legal or tax advice. Nothing should be construed as solicitation of an offer to buy securities.